All right. Today is Sunday, October 3rd. This is a recap for the stock market activities last week, an outlook for the week to come. Folks, this program is a Sunday night special. It's heavy, it's hard hitting, and most importantly, it's not for the babies, it's not for the culties, it's not for the zombies, it is for those who have a stomach of steel. I know I'm fired up, so buckle up your seatbelts and
Let's get it on!
in focus tonight, we're going to talk about the pill for Merck and the implications regarding the labor shortage and mandates. You know, the V mandates. Then we're going to talk about market sentiment. And lastly, how can we identify the market bottom? And let's start with the news for Merck regarding the pill. And just an FYI, I'm going to use abbreviations. I'm going to change certain names and certain words to evade the algorithms police, you know, from our dear leaders at Big Tech. On Friday, we got the news that we have a pill for Merck, and apparently it has significant success rate in cutting the risk of hospitalization and severe illness. And therefore, the stock of Merck shot up higher to the tune of over 10% at some point. Meanwhile, the stocks of V makers, the likes of Moderna, for example, went down significantly. And by the way, here are some unusual trades from the options market regarding Merck. And as you can see the dates right there, starting from September 23rd, all the way till September 30th, right before the stock shot up on Friday. And of course, I'm doing SEC Chairman Gary Gensler work for him. Because as you know, SEC Chief Gary Gensler is in a coma. And of course, he watches the program, by the way, from time to time. And he did not like us calling him in a coma. And he decided to flex his muscles. On who? On a bunch of retail kids who traded GameStop. But is he going to flex his muscles against the big guys, the JP Morgans, or shall we say the Fed presidents? Because we now know that pretty much all of them traded stocks and bonds on insider information. But is Gary Gensler going to do anything about that? Of course not. And I have a message for Gary Gensler because it actually was one of those trades that you see in the screen right now. And of course, the trick is to open little at a time. Meaning you open 500 contracts today, then tomorrow you open another 500, and the day after another 500, and therefore you evade the SEC altogether, just in case they wake up from the coma. But I assure you, 100% that I did not trade Merck call options based on insider information. Not whatsoever. I assure you. Trust me, because my thesis was technical in nature for both buying call options on Merck and buying put options on Moderna. And this is what I said a few days ago. What about the ticker mRNA, Moderna? We have a bear flag, and the CEO of Moderna says we will go back to normal next year. In other words, please short my stock. We're done here. I made hundreds of millions of dollars, perhaps billions. We've been dumping and dumping and dumping. Please short our stock. We're done here. And therefore, my call is Moderna will flush down all the way to close the gap. As you can see right there, it's going to close the gap and perhaps fall all the way down to the trading channel. This will be one of the biggest corrections that you have ever seen because the name is severely overvalued. On the other hand, the technicals say that we have a wedge consolidation and the chart is about to break one way or the other. Since this chart has been underperforming for over a year now, perhaps the energy will be released to the upside. And as you can see right away, the stock of Merck shot up higher and now it is trading above the triangle pattern. Likewise, Moderna stock is falling apart. And I know what you're going to say. I don't believe you, bro. You probably had some insider information from Merck. You have somebody who works there and they told you about the pill. And I say, yes, you're right. 100%. You know why? Because the pill news from Merck was actually out on Thursday before the stock popped higher on Friday. So I don't know. Did the stock market pop higher on Friday based on the pill news? As the experts might lead you to think so. Or did the market rally higher based on short covering from bears booking profits? This is an important question that you have to debate because the news about the pill was out and it was publicly available information on Thursday before Merck's stock popped up higher. And in a nutshell, the pill for Merck is a game changer. Why? Because it leads us closer to normalization, to restoring the economy to what it was before the pandemic. Think about it. Here's a pill. We can say everybody can go out, have a normal life, and if you contract the virus, and you get sick, here's a pill. It's cheap, it's widely available. You take 2 pills a day, and it reduces your risk for hospitalization and severe illness by more than 50%. And by the way, the studies that they did, Merck, were on high risk population, meaning that the probability for reducing risk is even higher in age groups within the population that are not under high risk to begin with. This is perhaps a more practical solution to renormalizing the economy than the V. You know, the holy V, the holy jab, because the jab, you have to get it over and over and over and over again. We have jab hesitancy, we have conflicting information, and jab side effects that we are probably not even aware of. And therefore, this is the right solution. We have to face the music here. This thing is going to be with us for a long time. And we're going to have new variants, the mu, the skew, the who, it doesn't matter. And having the population getting jabbed over and over and over and over again is just not practical at all. This is the practical solution. And therefore, right away, on Friday, you saw the stocks of the reopening names. For example, the casino stocks were surging higher. And the reason is the rise of the thing, the C word, even though we have the D word now, clobbered the casino industry in Las Vegas. So perhaps this is the solution to reignite the economic recovery once again. And that leads us to question the validity of V mandates. They're draconian to begin with. There are constitutional issues here. And perhaps the pill for Merck is the solution that will make everybody happy. No more mandates. The pill is available. It's easily accessible. It is cheap. If you get sick, you use it in the story. If you are at a high-risk population, you probably need the V on top of the pill. And now we have great control over this virus, over this pandemic, and we can go back to normal. But are they going to welcome the pill with open arms? We're talking about the media. We're talking about the V cult who've been demonizing other people, who've been cheerleading to violate the bodily autonomy of fellow Americans.
A COVID treatment in pill form, the first of its kind. Merck, with new data out today showing its antiviral drug, taken twice a day for 5 days when symptoms begin, cuts the risk of hospitalization and death in half.
This is a phenomenal result. I mean, this is a profound game changer to have an oral pill that had this kind of effect.
Merck says it's seeking emergency use authorization as soon as possible. The federal government has already contracted to buy 1.7 million doses.
We always hesitate to make any timelines.
The experimental pill is being compared to Tamiflu, which is supposed to be taken within 2 days of flu symptoms. Still, the new drug has only been tested on unvaccinated people, so more studies are needed.
If approved, I think the right way to think about this is a potential additional tool in our toolbox to protect people from the worst outcomes of COVID.
Vaccines, experts say, are still the best tool. And with that in mind, today California Governor Gavin Newsom announced that the COVID vaccines, once fully FDA approved for kids, will be required in all of the state's public and private schools, affecting nearly 7 million students, grades K through 12, the first such mandate in the nation. A U.S. Supreme Court justice has now denied New York City teachers' request to block their vaccine mandate. Meanwhile, the New York governor says 87% of the state's healthcare workers are now fully inoculated. Krista Michael from Rochester hasn't been and might soon be out of a job.
I just don't want to take it right now. It's a personal choice that I feel in free America, I should have the ability to make the choice if and when I want to take it.
Would you say that you got most of your information from online sources?
Probably so. I've watched a lot of videos online from multiple doctors.
Why would you trust those doctors and scientists over the FDA or the CDC?
I don't really know how to answer that. I guess maybe I'm not there yet.
I would like to answer that. The lady says, I'm hesitant. I'm not sure about the FDA. By the way, this is the anti-V, the anti-science person, who actually happens to be a healthcare worker too. But perhaps she doesn't trust the FDA because of this. The biopharmaceutical industry provides 75%, once again, 75% of the FDA's drug review budget. Is this a problem? Yes, it is. Here's another one. Hidden conflicts, question mark. Pharma payments to FDA advisors after drug approvals spark ethical concerns. Here's another one from UConn. You know, the anti-scientists, the anti-jabbers over at UConn scaring the public about the very trustworthy institution that is the FDA. UConn says, why is the FDA funded in part by the companies it regulates? Good question, isn't it? Nearly half the agency's budget now comes from user fees paid by companies seeking approval for medical devices and drugs. Again, can you trust these people? Of course not. But the media is demonizing this lady, asking her question as if she's stupid, in a demeaning way, by the way, saying, why don't you trust the FDA? Why do you trust online sources? What are you, a conspiracy theorist? Meanwhile, she is a healthcare worker. And of course, here comes the media waging a war against the pill. Why? Because the pill challenges their narrative, the draconian, tyrannical, and perhaps unconstitutional narrative that we should force people and violate their bodily freedom and autonomy for the greater good. Because we have to save lives. We're so eager to save lives, we want to violate your body and your choices, right? These psychos are the same people. When Joe Rogan got sick, by the way, they were cheerleading and hoping that Rogan would die so they can use him as an example. Look at what happened. Look at what happened to this conspiracy theorist. You see what happened to him? These are the same people who claim we want to violate your body to save lives. Matter of fact, we want to save lives so much. We cannot wait to save lives. We're actually hoping for somebody to die so we can use him as an example to scare people. And guess what? Rogan bounced back. He's not sick at all. He looks fine to me. He rebounded quickly. His bald head is still shining. No problem at all. But here come the sickos attacking the pill. Merck and Ridgeback Therapeutics' experimental oral antiviral treatment is being heralded as a pill with major upside potential in the fight against the COVID-19 pandemic. Here comes the but even as experts start combing through data, on the drug, whatever that is, which was shown to have the risk of death or hospitalization in 775 quote-unquote at-risk adults. Some say there is a potential downside worth acknowledging about the drug, which has not been authorized or approved by the FDA. What a joke. What a joke, you hypocrites. The V was not approved by the FDA for a long time, yet you continued to cheerlead for it and spew propaganda all over the place that this is the cure of all illness, and those who don't take the V are the demons, and they should die. We could have stopped the pandemic if these demons got the V. But now you're shitting on a pill that could change the course of the pandemic and normalize the economy because it's not FDA approved? What a joke. What a garbage journalism that we have in this country right now. And of course, the entire pharma industry is corrupt. I have no respect for it at all. But I have respect for few people in that industry. Among them, former Merck CEO Ken Fraser. He had a cool-headed, level-headed approach to the pandemic and the vaccine from the get-go, while other companies, the likes of Pfizer and Moderna, were rushing. Matter of fact, I made a video about Moderna. We had CEO Stefan Bancel, who said that while he was at the beach reading a Wall Street Journal article regarding a mysterious infection getting spread over China, he grabbed the phone right away and he called Dr. Fauci. And he said, let's develop a V, without even knowing the facts of what's going on in China. Meanwhile, Merck and Ken Fraser said, let's wait, let's make sure that we're going to develop something safe. After knowing all the facts, let's not rush to develop anything. But regardless, here is the news media, once again, puking all over this pill. It's not a magic pill. Don't trust what you read. You still have to be V'd. You still have to get the V, right? They're dismissing this great achievement, this great progress in battling the pandemic. Why? Here's another article from CNN. Merck's COVID-19 pill is great news, but may not be a game changer. Here's another one from the New York Times. Fauci says Americans should get vaccinated even if Merck's COVID pill cuts death. Even though on Friday, Dr. Fauci came out and said that the new pill is quote-unquote impressive at keeping COVID patients alive and out of hospitals. Isn't this the goal, Dr. Fauci, that we finally have a break from this pandemic? We cut out hospitalizations and we save lives. Isn't this the goal? Or is the goal being an egomaniac, being obsessed of having control over people? And by the way, how is the V working in getting us back to normal and reopening the economy? Because so far we had a massive wave, perhaps bigger. We know for a fact it is bigger than the first major wave where we had 0% Vs, while we now have over 60% of the population got the V. How are we getting back to normal when we have BT cases? You like the big tech tyranny? Because this is what we have to do from now on. The BT cases. How did Israel go back to normal using the V when they had about 80% of their population getting the V? Regardless, they got a bigger wave when they had 0% Vs. Isn't the pill a better solution to finally realize that we're going to live with this thing for a long time, perhaps forever? And this is a major victory, a major key for our success as human beings in the fight against this virus. Shouldn't we be celebrating this pill instead of shitting on it? And by the way, on Friday, I don't know if you've seen this or not, but CNBC anchor Sarah Eisen, who has the V, by the way, yet she also got the C, or shall we say the D. Sarah Eisen got the V and she got the D anyways. And notice when she asked Dr. Fauci about all of this, he quickly became uncomfortable, agitated, and listened to his garbage answer.
Dr. Fauci, you guys have been pushing the vaccine, and I obviously understand why. I'm vaccinated. But I also have COVID, and it's spread through my entire family in the past few weeks. It's why I'm doing the show from home today. And I just wonder about the public messaging around vaccinations. 3 vaccinated people got COVID in my house. 2 unvaccinated children got it. Are you too casual about the limitations of the vaccine? No. Because it does feel to me that these breakthroughs are happening. They're happening regularly. And we haven't really seen the government pay that much attention to them or warn about them too much. The bottom line is we were still able to get it and transmit it. Thank God we're not in the hospital. I get it. I'm vaccinated, but you can get it and transmit it. And the government hasn't been warning about that.
Oh, yes, we have. And we've said that. And let me just give you the science and the facts. If you are an unvaccinated person, you have 5 times the likelihood of getting infected, 11 times the likelihood of being hospitalized, and 11 times the likelihood of dying compared to someone who's been vaccinated. So the data showing the benefit of vaccines is incontrovertible. If you look at the people who have died from COVID-19, overwhelmingly, 90+% of them are unvaccinated. Vaccination protects you against severe disease. And even when you get breakthrough infections, because remember, no vaccine is 100% protected. But what we do know is that if you get vaccinated and get a breakthrough infection, you are much less likely of getting a severe outcome. It is much more likely that you, in fact, would either be without symptoms or be mildly symptomatic. So you should not confuse the very important data that we now have a drug that can diminish hospitalization and death by 50%. You should not confuse that with the overwhelming benefits of the protection of vaccines. Those should not be confused.
And of course, Dr. Fauci was uncomfortable. How dare you ask these questions, lady? Dr. Fauci, let me give you the facts and the science, right? Because you've been lying all along, flip-flopping all over the place. Let me give you the facts and the science, because your argument is, yes, we have BT cases, but the V prevents severe illness. And this is true. The V is highly effective in preventing severe illness. And if that is the case, then why do we have mandates? Shouldn't this be a personal choice, personal responsibility? You assess your own risk and you decide. Do you want to go to the hospital when you get the C or the D, or do you want to stay at home and reduce your risk of severe illness? This should be a personal choice. Of course, Dr. Fauci says, yeah, we're monitoring. We're keeping data on BT cases. False. The CDC only tracks a fraction of BT C19 infections, even as cases surge. Okay? Here's another fact. from these anti-scientists over at the National Geographic. Evidence mounts that people with BT infections can spread the D easily, okay? And here's another fact from the CDC director herself.
Our vaccines are working exceptionally well. They continue to work well for Delta with regard to severe illness and death. They prevent it. But what they can't do anymore is prevent transmission.
So again, the V does not prevent the infection. The V does not prevent the transmission. The V is only effective in reducing severe illness and hospitalization. Highly effective. So why do we have mandates? And why do we continue to dismiss the validity and the effectiveness of natural immunity for those who've been previously infected? Dr. Fauci says, I don't have a firm answer about that.
And just real quickly, there was a study that came out of Israel about natural immunity. And basically the headline was that natural immunity provides a lot of protection, even better than the vaccines alone. What are people to make of that? So as we talk about vaccine mandates, I get calls all the time. People say, I've already had COVID, I'm protected, and now the study says maybe even more protected than the vaccine alone. Should they also get the vaccine? How do you make the case to them?
You know, that's a really good point, Sanjay. I don't have a really firm answer for you on that.
So Fauci says, I don't have a firm answer, but I would still like to violate your body. Again, the man is a creep, he's a pathological liar, and an egomaniac, obsessed with the spotlight. When you think about it, he's no different than Trump, by the way. When both of them were on the stage, it was like watching Mean Girls, fighting for attention. And I have the facts for you, Dr. Fauci. Natural immunity is durable, and this is according to the anti-science researchers at the Washington University in St. Louis. They reported that 11 months after mild infection, immune cells were still capable of producing protective antibodies. The authors concluded that prior COVID infection induces a quote-unquote robust and long-lived humoral immune response, leading some scientists to suggest that natural immunity is probably lifelong. Ta-da! Because infection began months earlier. In vaccination, we have more follow-up data on the duration of natural immunity than on vaccinated immunity. Again, why do we have this two-tier society? Those who have the V and those who don't have the V, even though they probably got better immunity. Isn't this a rational, logical question to ask? But we're being gagged, we're being muffed, we're called conspiracy theorists, we're dismissed as crazy people. Why? We know that we have a severe labor shortage that is crushing small businesses. Small businesses across the country are getting wiped out. To begin with, when the pandemic started, they got shut down. The lockdowns, they lost money, and the only aid they got is the PPP loan program, which we now know had severe violations of millionaires abusing the system, abusing the PPP loan program, scoring millions of dollars, and this was the only help that small businesses in this country got during the pandemic. Meanwhile, Wall Street, the big corporations, the big guys, they've been under quote-unquote accommodative policy from the Federal Reserve, aka Coke, printed out of thin air. Trillions and trillions of dollars to the tune of $120 billion minimum every month to grease up Wall Street. And now we have the Amazons and the Targets and the Walmarts of the world jacking up wages. They have no problem at all doing any of that. Meanwhile, small businesses are getting wiped out and destroyed before our eyes. And on top of that, now we have draconian V mandates that will crush small businesses even more. Is this the plan to destroy whatever left of small businesses in the country and hand these spoils to the Black Rocks and Blackstones of the world? Matter of fact, we now have Nobel Prize winner in chemistry, Michael Levitt, and he says perhaps the lockdowns were a mistake, were not warranted. But I know Don Lemon on CNN knows better about the virus, about what we should do and not do than this guy. Keep drinking the Kool-Aid. Keep getting brainwashed while they continue to rob and steal from you. Continuing, companies expect to lose 8%. Once again, 8% of the workforce is due to V mandates. Folks, we already have a labor shortage and massive inflation. This will add more fuel to the fire. Why do we continue to do this when we now know that we have a pill from Merck that could be the answer? And of course, we are reaching crisis level in New York hospitals due to the V mandates.
Topping our health lead today, New York State bracing for severe hospital staffing shortages because today is the deadline for all healthcare workers in the Empire State to be vaccinated against COVID or lose their jobs. 84% of all hospital employees are in compliance statewide, and that might sound high, but it also means tens of thousands of workers are refusing to get the shot. Joining me live to discuss, CNN Chief Medical Correspondent Dr. Sanjay Gupta. So Sanjay, what will happen to the quality of care at New York hospitals if the state suddenly loses tens of thousands of healthcare professionals?
Well, I mean, it's going to obviously be affected. I mean, we've been talking a lot about bed potential shortages because of COVID patients, but really the problem, as you survey around the country, including what you're describing in New York, is staff. And it's a significant problem. What happens is that hospitals will oftentimes then go on diversion, meaning they're not taking anything that is not emergent or urgent. Regularly scheduled operations, things that are not urgent operations, those things get postponed, delays. So it has a really significant downstream effect. We're seeing that at hospitals here in Atlanta as well. That's part of the issue. The mandate in New York went out sort of middle of August, and they said by today, healthcare workers needed to be mandated, and that's why these numbers are now coming to light in terms of what these shortages may look like.
New York City teachers also were facing a mandate, though right now it's on hold in the courts. Mayor de Blasio of New York City, he today said an additional 7,000 Department of Education employees got their shots because of the mandate. That was obviously the intent of the healthcare mandate as well. This comes after the CDC director said this morning that vaccine mandates do indeed result in people getting vaccinated, more people getting vaccinated. So lay it out for our viewers. Do these mandates work? Because the healthcare shortage, that seems troublesome.
And of course, Jake Taper says, hey, Doc, look at this. We tried tyranny and it worked. We told people you have two choices between getting the V or becoming homeless and not being able to feed your kids. So they decided to get the V. Wow. When you try tyranny, when you force people to do something or becoming homeless, they're going to do whatever you want. I didn't know Xi Jinping was right. We should learn from him. These are your beloved media personalities. This crisis will get even worse. The labor shortage crisis. Because truckers already under pressure. It's a tough job. It crushes your mental health. I've been there. I was a trucker before. On top of that, now they want to force you to get the V. We have truckers quitting, and this will lead to the shortages getting worse and prices rising higher and higher and higher for consumers. Instead of all of these draconian approaches, why don't we celebrate science and celebrate the achievement that came out of Merck on Friday, actually on Thursday? And some of us used that opportunity to make big bucks, buying calls. But again, why don't we celebrate the pill that we're getting closer to the end here, the light at the end of the tunnel? And as Dr. Fucci said, we use facts and science to lead us. Give us the facts. Here are the facts. The V's are highly effective in preventing severe illness and hospitalization. Fact. Here's another fact. Men are more likely than women to die from the virus. Here's another fact. Certain age groups are at a higher risk of mortality from the virus than others. You can see the rates right in front of you. Here's another fact. Certain ethnicities are more susceptible to severe illness and death from the virus. Given all of these facts, you, the people, assess your own risk and take personal responsibility in making the right choice for you. I guarantee you, if this was the approach from the get-go, we would have had 90% vaccination rate. Instead of the scare tactics, the threats, the draconian mandates, and violating fellow citizens' rights. You see, it's a thin line to dance on here. When you enable these violations and you encourage them because they fit your own narrative and harm others that you disagree with, this is a thin line between freedom and tyranny. What do we have right now? We have women across the country saying, my body, my choice, protesting all over the weekend. When it comes to a V that reduces severe hospitalization effectively, but doesn't reduce the rate of transmission or the infection to begin with, shouldn't this also be my body, my choice? Because this is a slippery slope. Next thing you know, companies and corporations will mandate that women take contraception pills, and they have to share that proof, that evidence that they're taking it with their employer for the greater good, right? This is the next thing. It's a slippery slope. Once you enable one thing, it evolves into another. And soon enough, what you have enabled, the monster that you enabled, will come back and bite you right in the ass. And with that out of the way, let's move on to market sentiment and see what's going on here. Because your favorite analyst, market astrologer Tom Lee. Tom Lee said 1 month ago that September will be good, a strong September, but be careful of October. What did we get in reality? A bad September. So is Tom Lee about to stick to his own prediction or what? Of course he's going to flip-flop. And now he says he's all in. And you should be all in. October is going to be great for the market. Again, I told you and I predicted this long time ago. In a bull market, in a mania bull market fueled by Coke, everybody's right. Everybody's a genius. So long as you say stocks will only go up. Buy the dip, buy the dip, buy the dip. Even my dog is outperforming the S&P 500. And I'm not joking, by the way. Those of us who remember the dot-com bubble, you remember the chimp who outperformed Wall Street, the chimp who beat the S&P 500 year after year after year in a hyper bull mania market. But the real winners show up in the bull market and the bear market. And Tom Lee, I told you this, I predicted this, will get caught with his pants down in a really bad one. And here is the reality, the facts about the market. The percent of stocks trading over 10 times, once again, 10 times price to sales ratio. We're now reaching 25% of the entire market trading over 10 times price to sales ratio. This is the second most expensive market ever after the dot-com mania. On top of that, what was leading the market higher, by the way? The participation from the retail traders and investors who were buying call options randomly with blindfolds on, running Naruto style heads first, asking questions later, buying call options in the most garbage companies ever, the non-profitable tech. Now the call options mania has already peaked, and do your own homework. Once the call options mania peak, who do you think will support the market higher and higher and higher? On top of that, we have rising yields. Rates are rising higher, and this is crushing technology stocks, the growth, the momentum kind of stocks. Mega cap tech stocks rallied through the global pandemic, fears of a bubble, and rising regulatory scrutiny. The bond market could be the hurdle that finally trips them up. And as you can see right here, when we use the core PCE deflator, we got, by the way, the PCE number, the Fed's favorite inflation measure on Friday, which was at 30-year high. So much for transitory inflation, Mr. Powell. But anyhow, using the deflator method, this is the most overvalued bond market since 1974 and 75. I wonder what happened back then. I wonder what was going on back then. And by the way, what does that tell you? It tells you, absent of Fed manipulation of the market, the 10-year yield should be way higher. So I ask you the question once again, what happens when the Fed removes the so-called accommodative policy and stops buying bonds? Don't say you haven't been warned, because for now, the market is a cocaine addict. The market could care less, by the way, about fundamentals, about earnings, about nuclear wars, alien invasions, asteroids, ending humanity and the planet. That doesn't matter for the market. The market will continue to go higher so long as the coke continues to flow into the market, courtesy of the Fed. But what happens when inflation forces the Fed to dial back that accommodation? The market will suffer withdrawal. No more coke. What do you think will happen? So when you look at news like the Merck pill, for example, we have the experts, quote unquote, attributing the rally on Friday the Merck news, which is false, by the way. The news was out the day before, as I showed you. Matter of fact, the pill news should be bad for the market. Why? Because good news when it comes to the virus is bad news for the market, and bad news is good news. The stock market has been thriving, hitting all-time highs after all-time highs after all-time highs as the pandemic was raging and destroying the economy. But the moment the economy started to recover and the virus started to go away, the stock market stopped performing. And then Delta came, and the market started to perform once again. And now that we're seeing the end of the tunnel, the Merck news is good news in the battle against the pandemic. What does that mean? It is bad news for the stock market. Why is that, by the way? Because bad news prompt more coke from the Fed. Good news prompt less coke from the Fed. This is the golden rule of investing right now. If you understand it, you will outperform the S&P 500 year after year. More coke means higher stock market. Less coke means the market will go down. Simple as that. And by the way, here is more troubling news. Stocks are at 70-year high as a share of household financial wealth. Wow. When this market does a U-turn and starts to crash, it will be the most epic crash of all time. And unfortunately, it will destroy massive wealth out of households, average households who've been chasing the mania, chasing the lottery ticket. Meanwhile, the drawing already happened and the billionaires won. Corporate executives, corporate insiders, they are the one who won the lottery. You did not. You're holding on an expired lottery ticket and you're hoping you're going to win. Wake up. Wake up. You're not going to win. Either you know when to stop dancing or you're going to continue to dance like a fool and open your eyes at some point. You're going to find nobody at the dance floor but you getting caught with your pants down. And here's the last thing I want to discuss before I move on to the usual market coverage. What are the signs for a market bottom? Do we have a bottom for now? Here's how you'll know. These are the conditions, of course. Number one, we need a top in the US dollar. Number two, we need a top in the 10-year yield. Number three, we need to climb the wall of worry. Not solve, but climb. So you tell me, because this is a collaborative effort, by the way. You and I, baby, you and I, we dance together. So you tell me, do we have a top in the dollar and a top in yields? And if we do, and I'll tell you, we have a bottom in the stock market. Absent of that, this is just a dead cat bounce, and we will slide down once again. And when we talk about the wall of worry, by the way, we're not really climbing. Specifically when it comes to China, we have the Evergrande crisis still going on, and that massive bomb could detonate at any time right now. On top of that, we had disturbing news over the weekend. China sent 38 warplanes into skies around Taiwan on Friday, the highest number of Chinese military aircraft to breach the island ADIZ in a single day since Taipei began publicly reporting such activities last year. So again, this is getting worse. The Chinese surprise overnight could happen anytime. You wake up, the Dow is down 1,000, Dow futures that is, 1,000, 2,000. This is the next shoe to drop. And for a legitimate market bottom, we need to climb this wall. And to climb this wall, we need to stop the flow of bad news out of China. Anyhow, let's move on to the market's coverage today, starting with the market performance on Friday. And here we go. The Dow Industrial Average closing in the green by 482.54 points, or a gain of 1.43%. The Nasdaq closing in the green by 118.12 points, or a gain of 0.82%. The S&P 500 also closing in the green by 49.5 points, or a gain of 1.15%. And here are the sectors' performances for the week, leading the pack at number one, capturing the gold, the silver, the bronze, and the platinum, or whatever else you want to make. Energy, the only sector of the market that closed in the green for the week, is energy. Meanwhile, the laggards of the week are led by technology, healthcare, and consumer cyclicals. Rates are rising higher. No wonder why technology is underperforming. What about the advance to decline ratios? NYSE 77% advancing versus 20% declining. Meanwhile, the Nasdaq 60% advancing versus 36% declining. Moving on to futures. What's going on here? Starting with crude oil. The relentless rally in crude continues. We have gains of about 1% apiece for the WTI and Brent. And by the way, we have calls that oil prices will reach 100. And I'm starting to get worried here that perhaps this is the overcrowded trade. Everybody is becoming bullish in oil. Oil is going to be 80, 90, 100, 120. And when everybody thinks the same way, we got a problem here. But anyhow, the rally in natural gas perhaps is the more relevant one, because the rally in natural gas is what's reducing the sentiment over in Europe. We have an energy crisis in the UK due to the rise in natural gas prices. You also got to watch for heating oil prices, because heating oil prices now recovered the pre-pandemic highs. So this will be one expensive winner for the average folks if natural gas prices and heating oil prices continue to rise higher. What about softs? We have rallies here in coffee futures surging higher on Friday. Likewise, we have gains for cocoa and OJ futures. Meanwhile, losses, modest one for sugar, lumber, and a retreat for cotton futures. Keep in mind that cotton futures exploded higher, and now we're trading at multi-year highs. What does that mean? Your underwear is about to get more expensive. We talked about the shortage in diapers. Watch out here, we're about to have a shortage in underwear. And trust me, the way the market's trading right now, you're going to need a lot of diapers or underwear. So get them now before they get more expensive, because soon enough, the way inflation is going, we're going to go back to the good old days when we used the leaf to cover our hoo-has. What about metals? What's going on here? On Friday, we saw a rally across the board, be it a modest one for gold, but silver, platinum, copper, all surging higher on Friday. Why? Because the dollar retreated on Friday. The million-dollar question is the dollar going to continue to retreat? Meaning, do we have a top in the dollar or not? What about meats? What's going on here? Flat. Nothing is going on, modest losses here and there, but watch out here because we have ranchers pretty much getting out of the business due to the regulations, the restrictions, the inflation, which is reducing the margins for these ranchers. Who's going to supply the meat? We have a shortage of meat. On top of that, we also have diseases in cows. So watch out for meat prices rising higher and higher and higher. But what about grains? We have modest losses here for soybeans, soybean meal, and rough rice. Meanwhile, gains for soybean oil, corn, wheat, oats, canola, all rising higher. And keep an eye on wheat's futures, by the way. Wheat futures, because we have a bullish pattern here suggesting an upcoming breakout. You have a triple top. The chart continues to knock over and over and over and over again at the 760 resistance line, yet we're making higher lows. What does that mean? It's about to break out higher. Moving on to the big casino, the options market. What's going on here? On Friday, the hottest table in the casino was Tesla, with about 1.4 million contracts. About 42% of those were calls. Notice the reduction in calls in favor of puts. Buy the rumor, sell the news. We'll talk in the charts analysis. But here it is, number 2, Apple, with about 1.3 million contracts. About 68% of those were calls. And number 3, AMC, with about 700,000 contracts. About 75% of those were calls. And as you can see, Merck is rising higher. The implied volatility is rising higher, and call options traders are chasing the rally in Merck. Moving on to the unusual activities that took place in the options market on Friday, starting with the ticker XME. This is the materials ETF. The buying calls here, perhaps suggesting that the dollar topped already, and we will see the rally in materials continuing, or resuming, shall we say. They bought the 49 calls with the expiration date December 17th, with expectations that the XME will pop higher by more than 15.5% by then. They paid about $1 a piece to enter this trade. All in all, spending about $2 million. But what about the trade for the ticker IYR? This is the real estate ETF. They're betting for more downside here, perhaps suggesting that rates will continue to rise higher. They bought the 95 puts with the expiration date November 19th, with expectations that the name will drop down by more than 8.5% by then. They paid about 75 cents a piece to enter this trade. All in all, spending about $1 million. What about the trade for the ticker KSS? This is for calls. The name was down big this week, along with other retailers, due to, of course, the awful earnings from Bed Bath & Beyond, warning about supply chain problems. But now we have somebody betting for a rebound, buying the 57.5 calls with the expiration date November 19th, with expectations that the name will pop higher, or shall we say rebound higher, by more than 18.5% by then. They paid about $1 a piece to enter this trade, all in all spending about $1 million. What about the trade for the ticker OIH? This is another oil and gas ETF. They're betting for more upside here, significant one, by buying the 245 calls for the expiration date November 19th, with expectations that the name will pop higher by more than 20% or so. They paid big bucks for this one, about $3.5 a pop. All in all, spending about $2.5 million. What about the trade for the ticker OTLY? Oatly, the piece of shit that it is. Why? Because here it is, they dropped an overvalued IPO, way overvalued, for the insiders and the executives to dump. And this took down my stock, SunOpta, the ticker STKL, even though oat prices continue to rise higher and higher and higher. But regardless, perhaps we have a bottom here. And if we do, I'm just going to buy more SunOpta. I'm going to avoid this garbage because it's still overvalued. However, they're buying these 17.5 calls here, the expiration date November 19th. With expectations for a pop higher of more than 19% or so. And they paid about $70 a piece to enter this trade. All in all, spending about $400 million. $400,000. That's an error right there. What about the trade for the ticker NCR? For, you guessed it, NCR. The name popped higher on Friday, but it has been declining for a while now. So we're talking about a rebound and perhaps a bottom for the name. In this case, they're buying the 45 calls for the expiration date, November 19th, with the expectations that the rebound will continue, and NCR will build on the rebound from Friday by an additional 10% or so, and they paid about $1.25 apiece to enter this trade. All in all, spending about $600,000. Lastly, what about the trade for the ticker ZIM? This is an Israeli shipping company, and they're buying puts here. Container shipping prices appears, keyword appears, to be topping. So this is a very interesting trade that I'm watching closely. They bought the 45 puts for the expiration date, December 17th, with the expectations that the name will drop down by more than 9% or so, and they paid about $3.30 apiece to enter this trade. All in all, spending about $1.5 million. Moving on to the heat map analysis. What's going on here? This is the weekly heat map. As you can see, the outperformance comes from financials and energy. Yes, Merck is popping higher. They have their own news. IBM is popping higher. Netflix is popping higher. Electronic Arts is popping higher. Most of these are either gamma squeezes via the options market or individual companies' news. For example, we talked about Merck and the pill. We have a gamma squeeze in Netflix. The video game names, EA, Electronic Arts, has been declining for weeks and weeks and weeks. So the correction in EA already happened, and therefore it is outperforming the market right now. When it comes to IBM, VMware, Cisco, and all of these value tech names, they tend to outperform when yields rise higher and the rest of technology underperforms. So this is a trend to watch. Likewise, we have Ford overperforming the market. Ford has its own news, more plants. The production is about to ramp up. They're hiring over 11,000 workers. Likewise, we have a rally here, a mini one in resorts and airlines. And this rally happened primarily on Friday, right after the Merck pill news. Yet the underperformance is what's notable here. We have massive declines for technology, biotech, communication services, all down, because when yields rise higher, you're going to see a lot of pain in these growth momentum sectors of the market. Now, here's the problem, by the way. Do we have a confirmation in the rally in industrials, metals, or even energy? The answer is no, because the dollar continues to rise higher and higher and higher. The dollar closed the week in the green, so I don't have a confirmation here in the rally in energy, and therefore I call the rally in crude oil prices as extremely impressive and resilient, because I haven't seen a rally like this before. And therefore, we go back to the title of this video. Who's lying here? Is it the dollar or oil? We'll find out. The only confirmation that we have is the rally in banks and financials. Why? Because yields popped up higher, and therefore we have a confirmation that financials are okay, but everything else is not. Moving on to charts, starting with the SPY 30 minutes chart. What do we see here? A big rebound, recapturing 434 for support. Now, is this bullish or bearish? The answer is it is bullish. Did we catch the rebound from the double bottom? The chart went slightly lower than that bottom before, but again, we're not going to make a big deal out of it. The question remains, do we have the double bottom, or will it hold? So this is bullish pattern number one. Bullish pattern number two, what if the market declines? It pulls back after the rally on Friday, forming a reverse head and shoulder formation. And then we rebound and the market rallies higher. The bears will counter. You guys are getting it wrong. You're not seeing the big picture here. What if this, an actual head and shoulder formation, meaning the bounce that we saw on Friday was a mere short covering rally, and the market will do a 180 once again and continues to decline until it finds solid footing? I would give the bulls this argument, because they have two formations in their side, the potential double bottom and the potential of a reverse head and shoulder formation. The bears have the big head and shoulder formation, but that's pretty much it from an intra-day perspective. What about the daily chart for the continuous contract on the SPY? Again, is this an ABC pattern? And if it is, the market should go down to a minimum of 4,232. Notice that the daily candle on Friday failed to close above the previous day's candle. Is this bullish or is this bearish? The answer is it is bearish. It's not bullish. So the bears win on the daily chart, the bulls win in the 30 minutes chart. But the facts remain the same here. The market is getting slightly oversold You look at the RSI, the MACD indicators, perhaps the market can build on the rally on Friday and rise higher all the way to the resistance at 4,384.5. But will it break above that level? That remains the question. If it does, then the bulls gain significant advantage here. But for now, the bears have the advantage from a daily chart perspective. And what about the Qs? 30-minute chart, rebounding higher, closing slightly below the resistance at 360.5. In this chart, the bears continue to have the advantage because all what the Qs did is rebound higher, not even capturing 360.5, and we are still in this bearish formation, a primary leg down, consolidation before you drop down further. The bulls will counter and say, we already dropped down, so the bear flag played out, yet we did a 180. So this one, the bulls have an argument here, but the bears have a slight advantage. Now, what about the daily chart for the continuous contract and the Qs? We have the head and shoulder formation. The candlestick looks good. It looks bullish, as if we have a bottom. The RSI, the MACD indicators are signaling oversold conditions, but the volume has been rising on down days. The head and shoulder formation has more juice to play to the downside. And at the end of the day, if the head and shoulder formation plays out, the Nasdaq should go down all the way to 14,000 in the futures. Therefore, any rebound will be met with skepticism from bears. Absent of the chart recapturing 15,000 as support from a weekly perspective. So for now, the bears continue to have the advantage on this chart. Moving on to the IWM small caps, the Russell 2000. Now I told you on Thursday that if the chart of the IWM recaptures 218 as support, I'm going to play this rebound by buying the 220 calls. My target will be the resistance line at 223. This is exactly what happened, and this was a very good trade. In, out, hello, goodbye. If the chart opens down on Monday, then we have another trade going back all the way to the support of 218. So you're going to buy puts, 220. The target is 218. In, out, hello, goodbye. But you got to wait for a confirmation here, because what if the IWM pulls down and then it climbs higher once again, forming an A, B, C pattern to break the resistance of 223 once and for all? How do you distinguish the difference whether this is a legitimate pullback all the way to the support or a formation of an ABC pattern? The line in the sand is the break up candle. The bottom of a break up candle is the line in the sand. If that low is violated, then we don't have an ABC pattern. We have a flush down all the way to the support of 218. And that low, by the way, in the chart comes at around 220.66, let's say 220.5. If the chart trades below that number, then you have a confirmation for the put options trade. Moving on to the Dixie, perhaps the most important chart to watch here. Do we have a top? The answer is no, at least not for now. Why? Yes, the MACD, the RSI, all in overbought territory, quote unquote, but until and unless the chart breaks 93.7, we don't have a top yet. For all you know, this is an ABC pattern, a massive pop higher, a retreat, building of energy to formulate the C leg higher, which will break above 94.7, perhaps all the way to 95. If the Dixie continues to rally, then we don't have a confirmation for any rebound in the market here, and everything we see is merely a dead cat bounce. I asked you on Twitter, which one is faking it? And of course, your wife, your girlfriend, that's not a choice. We're talking about the Dixie and crude oil prices. Which one is faking the rally? Most of you believe that it is the dollar faking the rally higher. And if that is the case, then the dollar is about to top and the rally in crude will continue. I tend to be on the other side of this one. I believe that the rally in crude oil prices is merely based on speculation. And now we have all of these quote-unquote analysts saying that oil will hit 100 and 120. So I'm saying perhaps the Dixie will pop higher and oil will start to retreat, not saying that oil will crash. It will retreat for now, and then it will resume the rally higher again, perhaps reaching 100 by the end of the year, but not before. A legitimate retreat, because you cannot fight the dollar for too long. Matter of fact, here is the correlation between oil and the dollar. It is a clear, very evident inverse relationship. So why is the dollar rallying hand in hand with crude oil prices? One of these two is lying. What about gold? What's going on here? Gold, a dead cat bounce, attempting to climb the Fibonacci resistance level, but again, not interested in this one. My opinion is it will flush down to 1,685, and that means the dollar has higher highs to go. This is my call for now. It could change if the facts change. But for now, my call is gold down, dollar higher. And here it is, the chart of the 10-year yield, perhaps the second most important chart in the market right now. And as I told you, we have a pop. This could be an ABC pattern that could go down all the way to 1.4. That would be the B leg, and then we'll see the C leg higher, and the C leg will go to a minimum of 1.7%. If we get there, we will see the tech wreck. So watch out. Here's a chart for the TLT weekly chart. What's going on here? We don't have a confirmation that the consolidation around 149 will break to the downside. Why? We don't have a crossing in the MACD yet. We don't have a significant negative divergence on the RSI, but the volume is rising in down days. Perhaps this upcoming week will be a confirmation that the rally in the TLT is over and yields are about to pop even higher. Here's a chart for the VIX. 4 hours chart. We're watching the MACD indicator. The moment you saw the MACD indicator curling down, creating red impressions on the histogram, you know right away that the SPY is about to rally higher. Do we have a crossing here? A confirmation of the weakness? It is just one candle. It's really hard to call here. The bulls have a legitimate argument. The bears also have a legitimate argument. The bulls would say, we crushed the VIX. We have crushed the VIX Friday. Back on the table again. The bears will counter and say, but the VIX is still trading above 20. Both sides have a legitimate argument here. We will see the resolution of this battle on Monday. What about Apple? What's going on here? A really good looking candle here, indicating a bottom, but how long will it last? The confirmation will be crossing above 145. Absent of that, we don't have a confirmation. For all you know, this could be a bull trap. What about Tesla, the souffle? The bulls would say, yes, the triangle formation was broken to the downside, but we're recovering. We're doing a repair job here, forming higher highs. And it's just a matter of time before the chart pops higher above 781. The bulls have another argument in their side, which is pop Tesla Mondays via the quote-unquote whale who buys a significant amount of call options on Monday. The bears will counter and say, wait a minute here. You have broken the triangle pattern to the downside, and now we have a bear flag formation. The likelihood is the chart will go down to the support of 742. Oh, on top of that, we have buy the rumor, sell the news. What are we talking about here? Over the weekend, Tesla revealed that they have delivered over 241,000 cars in the quarter, which is extremely impressive if it is true. And I say that because Reverend Elon Musk is a pathological liar, and you cannot believe anything that comes out of that company. Matter of fact, Tesla does not break out delivery numbers by model, nor does it report sales or production numbers from China versus the US. So there is no way here to verify these numbers. Tesla put customers through repeated unexpected delivery delays during the quarter. In their release on Saturday, the company acknowledged the delays, blaming them on quote-unquote global supply chain and logistic challenges, then thanked customers for their patience. This is really tricky here. What will the market believe? Because we also got the news from GM, Stellantis, Toyota, Honda, all missing their deliveries due to the chip shortage. So either Tesla had superior management regarding supply chain issues during the quarter, or Tesla's flat out lying. In either case, the market response could be surprising here. Instead of the stock popping higher, it could drop down merely on buy the rumor, sell the news. What if this peak deliveries for Tesla before the supply chain issues start to hit Tesla too, which has better management, by the way. This is a fact. We know that. Tesla has better management when it comes to supply chain issues and chips because they're ahead of the game. They have a head start in the EV manufacturing business. They're already stocked. Meanwhile, General Motors, Ford, they have to fight for these supplies. But the question is Tesla about to face the same issues now? Because we know that Tesla missed the delivery numbers for Model X, and we now know that we have a supply issue at the Fremont factory. So how will the market read this one? Will the market celebrate the achievement from Tesla, beating expectations and delivering more cars regardless of the chip shortage, or will the market read it as perhaps peak deliveries from Tesla and these supply chain issues and the chip shortage is about to hit the company next? Very important to watch here. And very important to distinguish. Moving on to BTC, tulips, what's going on here? Popping higher. Do we trust the rally in tulips here? Remember, I had 3 conditions. If met, I will go long tulips. Number 1, retesting 42,000 as support. We have a check mark on this one. Number 2, trading above 47,359. We have a check mark on this one too. Number 3 on the weekly chart, doing a repair job on the MACD indicator. This is also happening. Is it clear? Is it not clear? That remains to be seen. But for now, tulips fulfill 2 of my conditions. And therefore, if I want to go long, I would go long here via my favorite tulip, Ether ETH. But I'm not going to do it anyways because I'm not trusting this rally. There is something fishy about it, meaning that the mind says go long, your conditions were met. The heart says forget about it. It's not worth it. Moving on to AMC. What's going on here? Do we have a confirmation of the pop on Thursday? Maybe. The stock traded higher, but it did not close above 42.5. Matter of fact, it closed below 40. And that raises questions here that perhaps the pop on Thursday was a whale holding the bag with the $40 calls. They popped the stock higher, got out of the calls, pump, dump, hello, goodbye. From a 30 minutes perspective, the bulls would say, or shall we say the apes, the apes would say, we have a bull flag consolidation here, and the chart should pop higher, and it will close above 42.5. The bears would say, you're reading it wrong here. We have actually a bear flag formation, which will break to the downside. Which one do I lean on more than the other? The answer is the bear's argument, and the reason is it is supported via the MACD indicator. The bull's argument is not supported via any momentum indicators or even via the options market action because the pop happened on Thursday and no follow-up whatsoever, in the options market at least. Moving on to the conclusion of this video. What do we have on the economic calendar for this upcoming week? Monday, we have factory orders. Tuesday, we have the ISM Services Index and the Services PMI. On Wednesday, we have the ADP report, the private payrolls, and then Thursday, we have, per usual, the weekly jobless claims. And Friday, the most important day, we have the big one, the non-farm payroll report. And this makes this upcoming week extremely important. Why? Because Fed Chairman Powell said we, meaning the Fed, already met our substantial further progress test when it comes to inflation. Matter of fact, inflation is exceeding the substantial further progress test. But we have yet to meet the substantial further progress test when it comes to employment. When reporters asked Powell what would constitute substantial further progress in employment, Powell responded, I don't want to see a blockbuster report. I just want to see a decent report, a build-up, more jobs being created. And I think Powell will get his wishes absent of any cooking of the data. And if he does, then we will reach the level where substantial further progress is met in both inflation and employment. What does that mean? We're getting closer and closer and closer to tapering and the end of the cocaine era. Do you think this is bullish or bearish for the market? Anyhow, folks, I'm beat up here. I'm done. Thank you for watching. Thank you for listening. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.